Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Thursday, the 2nd of March, 2023. We're getting on about 6:15 p.m. Central Time. So was today a trade bottom? We're going to find out in the stock indices as we go through it. I'm not convinced it is. But it was certainly an important relief rally. At the minimum, we can call it that. Could it be more? We'll see. The data that keeps coming out today was the employment data, the claims data, let me use the right word, the unemployment claims. And I got to tell you, they just keep going down, not up. And what you see everywhere, and I'm seeing it because I was watching different comments today from Governor Waller, and then we had Mr. Bostic talking. So the Fed people are out there, but labor, the employers don't want to let go of their employees if they don't have to. And in the service industry, you can't get them. So now we're getting to the point where here we are in March, come another month, the outdoor cafes in different parts of I'll call it the upper South, as we get into the Nashville areas and things like that, they're going to be doing business. Chicago will be rocking and rolling in May. That's what happens. Now you got to hire more staff, not just for restaurants, but it's everything outside. Your gardeners, the kids, what about the day camps that are coming? What about car washes? I can go on and on and on. And that's the thing we're going to be facing. And I think the Fed sees it. So, I was looking at Mr. Waller's comments today. They were prepared text, and I read them page for page. I talk about it in tonight's update. And he's very clear that labor is something that they haven't been able to grab hold of. He feels, as I do, the Fed's done a good job on material inflation, but it has not got its handle around labor, and he doesn't know if they can unless they go to substantially higher rates. The other side of the argument, Mr. Bostic, sounded much more dovish. And maybe we're getting to that point. I don't know what he's seeing. He's got something in his coffee or tea in the morning that I'd like to have because I'm not seeing what he's seeing. But these guys are bright. They're the heads of these banks. They're seeing things that we don't see. And I certainly wouldn't compare myself in a room next to the brightness of either of these gentlemen in terms of what I know about economics and what they do. We had a great webinar today. I appreciate you all for coming. It was fun, and you're learning to write the questions ahead of time. I can bring up all the charts and have fun. One of the things we were talking about was, can you go in and buy ETFs that give you 5% returns and so on in the Treasury bills and so on that invest in that? And the answer, I gave 3 names. That's a possibility. For those of you that hate Jim Cramer, we talked about the fact that there is now ETFs coming out that will take the opposite side of his bets. So he says buy this or whatever in his club, they're going to take the opposite side, put it in. So if he's going long, they're going short in their fund. If he's going short, they're going long to see what it is. I think that's in bad taste, okay? He does his best. I don't care if he's good or bad. Nobody can do what he does every day and be right all the time. I'd love to see it. His job is to throw out new recommendations every day. They're not there. But that's his job. I don't hear him saying, oh, no, I don't buy this. Every day I look at the club and I see what they're doing. So that's my opinion. All right. And that's in defense of him. If you don't like me saying that, I'm sorry. But I think he brings good to the market in different ways. Try to do what he does before you criticize it. The very next thing now is, where are we? The market saw this, I'll call it rather bearish news today, and yet it rallied. Markets do that. So let's go to the charts and just see what we've got. We've come down to an area in the S&P, do I have to hit you over the head, where we're at the 18-day average of closes. How often do you hear me say, when the market's over it, it'll come back to it. When the market's under it, it tries to rally back up and fight its battle. That's where you're at. Is the market going to cave in from here and get under that number and stay there? It's at 39.80. You're at 39.83 as we're talking. What do you want from me? I mean, that's what I thought it was going to do. And I don't know which way off this chart it wants to go. So I go to the daily charts, not on a closing basis only. This has been in a downtrend, but we had a big up move today. I like that. We had an outside day. I like that. An outside day is one of two things. It's either a continuation of a pattern. Well, because it's an outside day up, it can't be a continuation of the downtrend. Or it could signal a trading bottom is trying to be formed. That's what I think is going on. If today's low is taken out on Friday or Monday, I'll deem it a total failure and I will look for acceleration to the downside. If not, and I'm dealing first in the S&P, then maybe the market's got a little bit of rally. I'm not saying bullish. You still have a clean downtrend, lower highs, lower lows. But where is it happening? Come on. Every day I've been saying the first challenge of a 200-day or a 100-day average, when you haven't been at them a long time, it's very difficult to get short looking for the market to continue from there. If you get my morning subscriber video, in unison, have I not been saying that since we got down here back here? I've said it's very hard for me to tell you to get short because more times than not, that first challenge, the market attempts to hold it in a big way. That's exactly what's going on. The Bollinger Band, you ran, and today you really tried to reach to it, just missed it. Okay. So you're trying to hold these key averages, and you have a market that is what? Now let's let this tell us. I think the strongest tool, if you learn how to use stochastics the way I teach them, with the formula that I use for stochastics, mine is different than yours. My subscribers in the morning, I give them the formula. It's different. You're not going to change the 14, the 5, and the 3 if that's what you're doing. It isn't going to work that way. That's not what it does. Both numbers you cannot count tonight. Why? If you count them tonight, all that you've ended up doing for yourself is you don't know where Friday's going to close. So we go to Thursday. Both numbers are under 20. We go to the day before. Wednesday, both numbers are under 20, and they're both under 20 the day before. That means I have what's called a locked-in slow stochastic reading. I will get friendly. You heard what I just said, friendly on this if the red line closes over 21. It's at 1890. It is not at 21. On this rally is where the market's going to meet some of the late-come sellers that are going to try to say, you're not going anywhere. And if you get over the 21, I think the market's going to have an opportunity to get a lift out of here, maybe back to the 18-day average. You're at a real critical point in the market. When I come to the Nasdaq, not the case. You didn't embed. Both numbers tonight are under, for the moment, 20. But when we come to yesterday, both under 20, both under 20, not both under 20. Got it? You don't have your 3 days in a row minimum. So tomorrow is the key. Another inflection point. We're at a key area. What else? The 200-day average and the lower Bollinger Band. You didn't reach for this. Did we have an outside day up? No. So it's purely based, is it going to embed or not? Markets generally don't embed. They generally get oversold and they correct it. The Dow, not an outside day, embedded reading that's flirting with losing it. If it loses it, c'est la vie. I would tell my traders to come out. This is a market I was telling my traders on this big rally today to go short. Win, lose, or draw. If I'm wrong, I'll know it. You'll close over to 21. So long, I'll have a losing trade. If I'm right, I would look for the market back at the 200-day average to take some money off the table. We'll see if it does it one way or the other. In the micro mini Russell, this is the market I've told my traders, at least my subscribers, not to be short. Why? It's the strongest. It doesn't want to embed. The others are all trying to embed. It's not. You don't sell the strongest. You sell the weakest. Got it? You're going for the ones that are embedded if you're going to be on the short side. You can be wrong. Markets are due for a correction. They've had a big break. I can live with that. But if they don't correct and you just keep rolling down, you won't be able to get short because that's what bear markets do. They eat your heart out. They leave you behind. In the T-bond market, this is the power of an embedded reading. Now, the hardest thing in the world is to try to go short a market that just doesn't have a day that has a higher high. Every single day from back here has had a lower low day. That's a powerful downtrend. And how can you rally the stock market if you keep carrying interest rates higher? How? Technical. You can get bursts of short covering. But if you're really going to say, hey, those markets are going to go up with interest rates, and now talking 5.5% for September or higher, all you need is a hot CPI number. You got a real problem. The stock market will go zingo to the downside because it's just telling you the Fed's got to go a lot higher for a lot longer. The battle will be, do they go a quarter or a half? I'm still of the opinion they'll go with quarters. Anything look friendly to you there? Not to me. It just keeps coming down. What about the dollar index? Well, it's not a buy, it's not a sell. It's a rough market here. You lost the embedded reading, so let's take a look at that. And we'll go back right here. Here's a market that had all these days where you were over this. Then you come down, let me get you to it. And this is Wednesday. You can re-embed and get bullish again and lay a bear trap if the Thursday, which is today, you get both numbers back over 80. And they did it. This is called a bear trap. And in a bear trap, what often happens is until this gets back where you don't have this number under 79, you start looking for the market to come back up to the Bollinger Band, the closest of a moving average or a Bollinger Band. That seems to be what this market is trying to do. In the eurocurrency, we had a short covering rally, lost the embedded rally, got up to the 18-day average, and that's all it's worth. Boom. So now the market has to regroup. This is almost saying, yeah, that dollar could catch the people. We'll see if it's going to be the case. In the British pound, well, what are they going to do? They got a big problem. Boris Johnson might be out. He's praying that they can't get this deal done in Ireland so that his political fortunes go back the other way. I was reading articles about that. I read so much during the day. It's crazy. Lower highs, lower lows, and you're fighting at the 100-day, the 200, and the Bollinger Band. Oversold. I'll let somebody else carry the ball from there. I don't know what to do with that. Bitcoin. Have you ever seen a market just go to sleep on the 18-day average in sideways action? That's exactly what you've done. I run away from markets like that. I thought Ethereum would do better than it's done. It didn't, and I just said goodbye to that trade. Brent versus WTI. Are we going to go challenge the 677? I keep reading stories where Russia isn't going to lose the production, you think, that they're able to get another 1 million barrels a day of production out and sold to China and India, and that they're being fairly aggressive, and they're not as deeply discounting the prices as they were. When I come to the Brent, are we trending? Absolutely not. This is just a market in a wave. You had a downtrend, it ended, you took out that high, and you've been climbing every day. You do realize every single day now, for this day was higher than that. First day, 1, 2, 3, 4, 5 days in a row, we have made higher highs. Market has climbed straight up to the resistance of the green line, the 100-day. It's average of closes. It is not in a trend. This is called a vertical rally. It's a short covering rally typically. It's met when the market, instead of it going down, those that stayed over their hand come up. Now, some traders, I'm not one of them, but they'll look at open interest and volume to see, is the market picking up new volume? Is it decreasing? Is it true short covering, new buying? They'll do that. I used to. I gave up on it years ago. It's nice to do it. It's great to teach in a classroom, and I did that. Remember, I did teach. I used to teach. I think it was, I forgot which college. I think it was Northwestern here, or it was one of the community colleges early in my career back in the 80s. And I used to teach in the evenings and teach kids how to trade the markets with what I knew. Believe me, at that point in my life, I didn't know that much. I'd be a better teacher today, and I am. WTI, fighting it, same thing, identical pattern. Now, the gasoline, I told you, I think that a low is in. Now I want to tell you, I think you're overbought. I don't want you buying up here into the first challenge of a Bollinger Band, but now we're getting a game plan to work with, so it gets exciting. And yes, I'm in the bull camp, but not up here at this point in time. In natural gas, I had clients today, we were talking about, not clients, but visitors to my website. Is that good? And Ira, should I go into the July or August? Why? There's nobody back there. I mean, please do yourself a favor. Understand that When you trade, you want to be defensive. Futures are 90% leverage. These are big boy contracts. You can get into real trouble if when you're wrong, you can't get out. And when you go further back, it's great for the hedger because he's locking up his cash value versus it. That's the concept. But as a speculator, each month you move out and you see that, you start losing the volume. So you've got the April, you've got the May contract, there's June, July, August. You'll see the volumes fall off, and so does the open interest. Well, they can whipsaw you. I've seen it. I've owned brokerage firms, and when people go far back out, you know what I did when I was running the margin department? Remember, I still have a big division of a company. I would take the margins right up through the roof. I'd go, you can do whatever you want. I appreciate it, but I want protection. I want to make sure that I'm not worried chasing you for money. Your call. Would I be telling a client to buy an overbought into a Bollinger Band? You buy it. I don't want to own that. And that's what I would be telling you if you were with me. So you hear me talk this way every morning if you join me in my morning futures video. By the way, at any point, you can click up here at the very top, and it'll take you to the research section of our website so you can learn about this. But I've been doing this now about 5:20, 5:15 in the morning. I'm starting to record. I'm up early, so what's the difference? And getting these out, and you're getting them about 6:10 in the morning. For a lot of you on the West Coast, that's pretty early. New York, it's 7:10 in the morning. Chicago, it's perfect timing. You're waking up. What has Ira got to say? And I make these in a way that, number one, they're fun. Number two, fun is important. Number two, personality. Number three, explaining all the way through. Looking for trade setups, teaching you the setup as it's there. If I'm wrong, I don't run away from being wrong. We were wrong. If we're right, we were right. I'm not going to jump on with drums and say, oh, look at a winner trade there. It's not how it works. It's trying to be more right than wrong, taking risks that make sense, covering 40 futures markets. You heard me, 40. Looking at all the different parts, and no, I'm not going to do orange juice and lumber and markets that you get into trouble in. Again, there's no real volume and open interest to trade against. The big ones, the grains for certain, the soft commodities, all the energies, all the interest rates, the currency markets, my favorite, the stock indices, the whole group of them, meat markets. We put it all together. We give you a full package. I do every single day, basically Saturday through Friday. That's an awful lot with weekly charts and daily. By the way, the cost, $7.95. You heard me. That's your introductory price. You're committed to nothing. I'm not looking for a long-term contract from you. You can go on a yearly and get a better price from me, or you can do it on a monthly. Give it a try. IraEpstein.com under the word research. I will talk to you all tomorrow. Take care.